What is up, everybody? Welcome back to another episode of Bitcoin and Markets. Happy New Year. We made it through 2023, crazy 2023, and 2024 is going to be even crazier. We have the U.S. elections coming, of course, and all of the recession talk for the macro side, but Bitcoin specifically, the next few weeks are going to be very insane. I'll be covering it all here. I've been covering it the whole time. So if you're new to my content, like, comment, subscribe. I will be checking periodically. I try to remember to check periodically throughout the streams for those chats. So if you're watching on YouTube or Rumble, put it down in the live chat, and I will look at that. And Telegram, you guys too. Thanks for hanging out. If you put comments into the post for this live stream, then I will be checking that as well. So, okay, let's get into today's newsletter. So Monday is when I put out the newsletter. Let's see if I can find the right. There's the right screen. And we're going to go to bitcoinmarkets.com. I had two posts today here. So this one you're seeing in the biggest print is the January price forecast competition. That's for paid members. You can enter for the first 4 days of the month, and you guess the price, or not guess, but you forecast the price for the end of the month. And then the closest person at the end of the month gets $20 in sats over the Lightning Network. It's a little fun competition we have with our community. So don't forget, if you are a paid member, enter. Every week, we have varying amounts of the paid members that enter, because some people probably forget to do that. But it's a fun way to have a little competition within the community, as well as have a chance to win back some of your membership fees there on the website. Now, the one we're going to go through today is the Bitcoin Fundamentals Report, issue number 271. Did skip last week. That was Christmas. Did live stream throughout the week a couple times. And so, yeah, now we're back here with issue number 271. Always start off with a meme. And this is a new version of this meme. You might have seen the meme with the person or the biker that's going uphill. And it's like what people think it's like to hold Bitcoin. And it's just like a nice, smooth incline up to all-time highs. But the reality is there's all these pitfalls, and there's like water, and there's like sharks, and like all this stuff to get up to the top. And this is a new version of that meme. I like it. There's thorns and broken glass and cactuses just to get up and hold. It's really hard to hold Bitcoin. And you see this every time in these cycles, because it makes me think of the cost of being an evangelist for Bitcoin, and why many Bitcoiners throughout the years stop being evangelists. So you go through some phases, right? You fall down the rabbit hole, then you can't shut up about it. Then you want to convince your family members and your friends to buy Bitcoin, but they didn't get there through the same route that you did. They didn't pay the dues to understand it. They didn't pay the dues to have the world outlook that you have. They might have a different world outlook, and they don't see the problems and why you need to hold Bitcoin and stuff. And so a lot of times they end up selling the dip, and they lose money on their adventure into Bitcoin. So it's very hard to evangelize Bitcoin to people. I say, if you really, really have to have somebody in your family buy and hold long term, it's best if you just buy and hold for them. And then in a few years, you can say, hey, I bought a Bitcoin for you back when it was 10,000, and I'm still holding it as 100,000, blah, blah, blah. Anyway, so love this meme. We're not lucky. We got here through hard work. That is from Naive Meme on Twitter. Okay, January 1st, 2024. Man, I can't tell you how big of a year this is going to be. I remember doing FedWatch with Nolan Bowerly, Count BTC. He's still doing that. What is it called now? Jesus. Breakfast in Bitcoin or something like that. And he said 2024 is going to be the year of Bitcoin. I thought we would have more of a 2023, a bigger 2023, because of the ETF hype. That didn't quite work out, but it was big. It was a big year, 150%. That's a huge year for Bitcoin. But I thought it would be like 200 or 250%. But he was, really keyed in on the U.S. presidential election. less so about the recession, but that's what I kind of keyed in on. And of course, the halving and all that stuff. So 2024 is going to turn out to be probably the most pivotal year in Bitcoin's history. I don't think that is an overstatement to say that. 2024 is going to be the most pivotal year in Bitcoin's history. The other years we could look at might be 2013 with Mt. Gox and the Willy bot. That was a pretty big year, but it's just in the line of early Bitcoin adoption. And then 2007 with the scaling debate and the user activated soft fork. That is probably number 2, I would say, for the biggest year in Bitcoin. And then I think 2024 is going to be the most important year in Bitcoin's history. Okay, so snapshot of Bitcoin up front. I always go through this. This gives you a 1 minute look through to see how the entire industry is doing. The weekly trend for price is still consolidation. We'll look at a live chart here in a minute. Media sentiment is very positive with all of the ETF marketing that's come out. A lot of pushback on the Bitcoin ban bill. We'll be covering that here down below. But and all the ETF hype, it is just very, very positive for Bitcoin right now. Network traffic is very high. We'll go over that here in a second. Mining industry is still growing rapidly, hit another all-time high in hash rate, and we're at all-time high in difficulty. Days until halving, 106, getting closer to that 90-day mark for 3 months, but it will be here before you know it. So price at time of writing was 43,500 exactly. That is 1,800 higher than the last issue, which was 2 weeks ago. So that's a 4.4% gain over the 2-week period of between issues. Market cap is still under $1 trillion, but we have to put it in $1 trillion notation because eventually we'll be talking about a 10, 20, $30 trillion asset. Satoshis per dollar, 2303, and 1 finny, that's my preferred smaller denomination of Bitcoin. That's 1/10,000th of a Bitcoin, is $4.35. Mining sector. Previous difficulty adjustment was almost plus 7%, just massive. We're pretty much at all-time highs for everything, and then you get a 7% jump. I mean, that's just incredible what's going on. I think there's a lot of new miners getting delivered right now. There is also a lot of consolidation going on in the space between the big public miners and miners that were going in bankruptcy, or not just miners, but all sorts of companies like Celsius, who wasn't really a miner, going through bankruptcy and getting helped and also acquired, and different things going on in the mining network, in the mining sector. Estimated adjustment for the next difficulty adjustment is 0.2% positive in about 4 days. Mempool, 431 megabytes. So when I updated this last issue, I think it was 335. So it's gone up 100 megabytes in 2 weeks. We're going to take a look at that chart here in just a second. However, at 335 megabytes, the fee to get in the next block was $9 last issue. That's down now to $7. So, it's not necessarily the total quantity in the mempool. It's how many higher paying transactions are in the mempool. So fees are down over the last 2 weeks. Of course, this is it varies quite a bit during any individual day. Low priority fee at the time was $5.96. So if you're willing to wait for an hour to get your transaction confirmed, you can save some money. And this little drop here is actually pretty significant, I think, when you talk about UTXOs getting stranded. So if the UTXO is too small to be payable or to be spendable, then just a small drop in fees can make that UTXO economically viable again. So you could even put this in and wait for 3, 4, 5, 10 days with a very low fee, just so that those UTXOs can be spendable. However, it effectively limits the supply of Bitcoin, and we'll go over that here in just a second as well. Lightning Network continues to shrink over the last 2 weeks, down another 30 Bitcoins in capacity, 0.6%, and channels down over 250 channels, or 0.4%. So Lightning Network is continuing to struggle in this high fee environment. Next section, in case you missed it, I did put out a Christmas update for the professional tier. I did not get to doing a Proton for last week. There was just very little price action, both in Bitcoin and in traditional markets. So, there wasn't really anything pressing and urgent that needed to be published, but I will be, doing normal as usual coming this week. Community streams and podcasts. I did put out Why AI Needs Bitcoin as a podcast, so you can check that out in the podcast apps. And I link to all these live streams. Blog. I put out a shale post about shale oil and why it's an earthquake in a geopolitical order. We covered that last week as well on a live stream. And Bitcoin Magazine Pro. I have this Bitcoin miner stocks prime for rally plus Bitcoin price update. That was a couple weeks ago now. They still haven't published my one that I turned in last week. I updated a couple of the charts so it would be, timely this morning, but we'll see if they actually, let me go in and see if they published it yet. So this is Bitcoin Magazine Pro. You can see my double dashboard post here. Bitcoin miner stocks prime for rally, but they have not put in my most recent one. So I will be watching out for that and I'll make sure to share it when it does get published. All right, let's get into the headlines. So I just started off with a brief little greeting here about Christmas and the New Year. I hope you guys had a Merry Christmas and Happy New Year's Eve last night. Hope it was safe for everybody. No one got hurt. I know, the two most dangerous nights or holidays are July 4th and New Year's. So hope you guys had a safe and happy New Year's celebration last night. And you're ready to go in 2024 because it's going to be a crazy year. I'll talk about my professional tier members that I skipped last week, but there was nothing to change in my forecast. So just stay tuned for my update this week. Okay, getting into the individual headlines. BlackRock, VanEck, among asset managers that submitted updated filings for spot Bitcoin ETF. So December 29th, the last trading day of the year, last Friday, that was the deadline set by the SEC for all of these people to get in all of their changes. I think both to the 19B-4s and the S1s. There was a flood of activity on Friday. I think everybody ended up getting everything filed as needed. And right after close of business, there was an article that dropped on Reuters. And this is what that article said. So people familiar with the filing process said issuers that met their end of the year filing revision deadlines may be able to launch by January 10th. So that window that we've been talking about, January 8th through 10th, that was the window for actual approval, not for launch. There's all these different moving calendars, moving schedules of comment periods and filing deadlines, and they all coincided and aligned January 8th through 10th. So the ETF experts, which I'm not one, but I follow the experts, they were saying that the approval window was 8th through the 10th. But now it looks like people familiar with the process, this might be SEC insiders, it might be these the people that are filing the paperwork like BlackRock and VanEck, they might be the insiders that are saying that they might be able to launch by January 10th. So we will see if that is the case. If that is the case, we'll probably get word middle of this week, maybe Tuesday, Wednesday, Thursday, sometime, that the approval has actually been made. They have gotten approval, and then they will launch on January 10th. So the SEC may notify issuers as soon as Tuesday or Wednesday that they have been cleared to launch the following week, said those sources. Okay, so big day for Bitcoin once this does get approved. I was talking a little bit beforehand with the guys on Telegram that maybe it's just me, but I have a feeling that there is some uncertainty. The uncertainty is actually growing at this moment. where it's still a 95% chance that they get approved, but it almost feels like 50-50. You know what I mean? And I think I mentioned that a little bit lower down here in this newsletter, but yeah, we're getting close. It's getting very exciting, and we'll have to see what happens to the price. The Inscription, next kind of topic here is the Inscription debate is making some headway. Over the past few months, the main discussion has been pigeonholed into pro versus anti-inscriptions. There has been little room for the moderate approach, with some going as far as to accuse people unconcerned as being part of an attack. So they were accusing people that were unconcerned as being part of the attack. And this comes from Brian Trolls directly on Twitter here. I like him, but he says that if you say the market will figure it out, you're part of the problem. I think that's horrible. I think that's absolutely horrible way to think about it. I responded to him. I said, "Oh, this is a straw man. You are figuring it out." He's part of the market. We're all part of the market. And what do I say here? The market will figure it out. And Brian is part of that market. We cannot act outside the market. All comments, debates, discussions, blog posts, buys and sells, options, threats, labels, memes, etc. are all part of the market that will figure it out. Even if there is a very powerful market participant, i.e. the government, they eventually will have to succumb to market forces if they are wrong. If the government is very wrong, you can hedge or partake in jurisdictional arbitrage. So everybody's part of the market. What Brian is doing here, part of the market. What I'm doing is part of the market. The market will figure it out. You can worry, okay? You can worry, but your worry is you responding to your incentives. You cannot not respond to your incentives. You cannot not, act according to your subjective value. And so all of this stuff it's all part of the process. It's a beautiful thing. It's a beautiful thing. I agree with Adam Back. You can't stop JPEGs on Bitcoin. And JPEGs aren't even the deal right now. I think it's mainly just text inscriptions that are the big thing, not even the JPEGs. But I look at it from a game theoretical and economics perspective. Inscriptions boost miner revenue and reduce liquid supply of Bitcoin by freezing low-value UTXOs. There is an ebb and flow, and Bitcoin and market participants can learn and adjust, likely building new layer 2 infrastructure. There has always been a future trade-off ahead of us when the vast majority of transactions would be priced out of the main chain. This has always been the case. Going back to the very, very earliest Bitcoin, probably Satoshi said this, probably Hal Finney said this very early on, that in the future, fees will be very high and you won't be doing low-value transactions on Bitcoin. They already knew you needed a layer 2. So there's always been this idea of a trade-off ahead of us. I don't think this particular period is the final straw. And from now on, all Bitcoin transactions will take part on layer 2s like Element sidechains, but it is a step along the way. These NFT pump and dumpers will run out of money sooner or later, like all other cycles in Bitcoin history. And then I just linked to a couple interesting threads here. So Asher Hop, we talked about his thread last time, or maybe it was just on Telegram. He says, oh, look, Dust has been a censorship type transaction or a way to censor transactions for a long time on Bitcoin. So this is nothing new if they create a new thing to censor transactions. I don't agree necessarily, but it's an interesting food for thought here. And then, of course, Casey Rodamore, founder or not founder, but he was the creator of the current implementation of ordinals. He also wrote a blog post that we covered. I think, was that on Friday's live stream or whenever that was last? Basically, he said that we need to move on. And I kind of agree with that. We just need to let the market work. If you feel threatened by this, if you feel threatened by ordinals and inscriptions and you think it's a bad thing, you are going to act out. You're going to act differently. You're going to follow your incentives and maybe create an effort to help change the network. Okay. Other people that believe differently, they're going to feel incentivized to stop you. These are all just memes out there in an evolutionary way in the market, and which meme is going to win, which ideas are going to win. But that's where it's going to get figured out. Okay. So I think there's no need, me personally, there's no need for me to get really worked up about it. But if you do, I'm not saying that's wrong. I'm saying follow whatever you want to do. Bitcoin will be fine. Next topic here, black pill Bitcoiners not happy with the ETFs. This space has quite a few black pillars. So if people listening to this probably know what the black pill is. That's when you are very pessimistic. You think there's nothing you can do. And every time you try to do something or something goes good, the powers that be will smash you down again, right? So those are the black pillars. And they found Bitcoin initially because they felt hopeless against the current system. They've carried that hopelessness into Bitcoin. The ETFs are an extremely major event, perhaps larger than all halvings in Bitcoin history combined. But they will still find a way to explain how it's all a plan to capture and destroy Bitcoin. It's far too late for that. I can see why people see the ETFs as a way to make quote unquote paper Bitcoin. This is the exact same theory that has been rife in the gold bug community for 20 years or more. Of course, you had gold futures for a long time. I think gold futures are deliverable gold, but there is a caveat that they don't have to deliver the gold for gold futures. They can deliver cash, right? So that was from decades and decades ago. And then the ETF came for gold in the early 2000s, and people were really talking about all this paper Bitcoin from the ETF, and all the different ETFs can just print like derivatives, and they don't even have to buy the Bitcoin or buy the gold, whatever. And so this was rife in the gold community, blaming this. So instead of asking deeper questions and looking for better understanding of the market and money, they take the shortcut and blame manipulation and the all-powerful government manipulator. Fact is, ETFs are legally required to hold the underlying asset. Can they cheat? There can be some cheating, yes, but it's dangerous for them, not just legally, but they can get taken to the cleaners by the market. You know, if the market sniffs out a weakness, if you have these billionaire whales and just huge whales out there making the market, and they smell it, little, molecule of blood in the water, they're going to jump on that and they're going to destroy you. So it's dangerous for them to not act appropriately, legally, as required to hold the underlying asset. Gold has underperformed expectations because we've been mired in a deflationary, not an inflationary environment since the GFC. And now also since the GFC, we have Bitcoin, which is a competitor, monetary competitor to gold. Think about this. Bitcoin's market cap, $850 billion. What if that was all buying pressure going into gold? I mean, gold would be 4,000. So Bitcoin has taken a lot of demand away from gold in this environment, specifically in this environment. QE and government spending aren't money printing / inflation. I'm just thinking of Point's post in the Telegram where I had to look it up now. Who was I talking about? Oh, I was talking about Guy Swan, and saying that I got to look at it now. So he said something about creating money out of thin air and lending it is the most insidious scam ever. And I said, this used to be me. I wouldn't say I'm a supporter of credit now, but there is a simple problem with this thought. Someone is demanding the loan. It's also has to be profitable or it wouldn't happen. In other words, the economy expands. So anyway, I went into that, and Point's like, that's why there's only 45 members in this Telegram, because it's so off the wall, or not off the wall, but it's so different, and people haven't been able to keep up, maybe, I don't know, with my different stuff. But that's what I'm saying here. QE and government spending aren't money printing. That's why gold has underperformed, because we're in a deflationary environment and has nothing to do with paper gold. And so you take apart the gold bug speculation or theory manipulation, and there's no reason to think there's going to be paper Bitcoin. So I'm trying to tie that whole thread together. The ETFs can only hold real Bitcoin. They can't hold derivatives. Any funny business will quickly lead to bankruptcy of that fund. Okay, so that was the black pillars. Let's get into the next topic, and that is the ongoing battle between globalists and Wall Street. And we've seen this come to the fore once again with this Perianne Boring saying that none of the co-sponsors of this Bitcoin ban bill from Senator Warren actually knew that it was a Bitcoin ban. So let's see what I wrote here. If you view this battle as simply government goons and bankers on one side against the people, many of the current events around Bitcoin won't make sense. You'll have to twist reality, create some dissonance to make the facts fit this false dichotomy that is, or the false dilemma here between government and bankers versus the people. That's not the dilemma. That's not the sides right now. One such case is Senator Warren and her Bitcoin ban bill. Why would the government be about to approve Bitcoin spot ETFs backed by Wall Street giants like BlackRock, but then Senator Warren is trying to ban Bitcoin? It becomes clear if you view the sides of this battle as the globalists, including the administration, versus Wall Street. And Wall Street happens to be aligned with the people's interest at this moment. And of course, the people are not some monolithic people. There's all sorts of billionaires and millionaires and liberals and conservatives. All the people is a vast, complex group. But right now, Wall Street is generally on the side of the populace. I would say that they're generally on the side of the populace for this battle. The globalists are losing badly, so much so they have to brazenly lie about Bitcoin to their co-sponsors of the Bitcoin ban bill. So they brazenly lied about Bitcoin being used for being a big avenue for money laundering and terrorism financing, which it is not. It's like less than 1% of that. So most of the money laundering and terrorism financing goes through the big banks. That is a fact. The big banks have paid billions of dollars in fines for funding terrorism. And Bitcoin doesn't move anywhere near that amount. It is just a complete false misrepresentation of reality. And Perianne Boring actually holds her feet to the fire, says there needs to be an ethics investigation on this, which I do kind of agree with. This week, we learned that the bill was written by the globalist special interests and lied about to the bill, and they lied about the bill to co-sponsors. Warren and others claimed it was a soft touch when it is an effective ban. That is what Perianne found out when she talked with them. And then I link to the video. You can also click on this link to go to the video as well. We're not going to watch it here now. It seems like this legislation is not going anywhere. And we did say that very early on, that she's 351 or 15 bills that she has proposed, and none of them have been made into law. So most likely this isn't going anywhere, but it was intended to progress the dialectic in the direction of a ban. However, Perianne and others are doing a great job by reframing the dialectic towards corruption and Bitcoin neutrality. So very good job there. I have had my disagreements with her in the past, but she's doing a good job. Every time, I think I watched this like 3 or 4 times, and each time it just got better. I noticed different things that she said, and the way she said them, they just got better and better as I watched it. So this is a very good clip. Good job to Perianne. All right, let's get into some macro news. Actually, before that, I'm going to check, see if there's any comments. So if you guys are watching on YouTube or Rumble, you can put comments down below and I'll check on it. Dex Invictus is back with us. Good to see you on YouTube, I think it is. Let me check the Telegram. All right, point. I'm going to have to read this. This is more in depth here. You say, I don't believe in resolutions. They are the equivalent of saying never in my mind, i.e., I resolve to never do something again, or I resolve to do something forever. I believe in making small changes that add up over time. I shared the below video with the member group, but I think it does an amazing job of exposing how to go about making changes and why such an approach works. I'll have to dive into that later. Thanks for posting that. Instead of stacking sats, think of it as stacking virtues. Oh, that's a great point, man. Yeah, you have to have a quality life, not just a stacking sats life. So you got to take time for what's important in life. You don't want to have, 5 Bitcoins and be 70 years old with no family and no, look back on your life and you never owned a chair. And you never did anything fun. You never took time off. So yeah, I agree with you. You got to stack virtues. You got to spend time with what's important. So those are great New Year's resolutions. Like spend more time with my kids, play more in the backyard with them, or whatever the case is. I think those are great ones. Small incremental changes will stack to produce satisfying default behaviors. All right, great comments there, guys, in Telegram. Let's get back into it. So, am I on the right one yet? Yep. Okay. Macro. These are just macro headlines. This is Bitcoin and Markets podcast, so I do a lot of macro. And I've been talking about this Red Sea now for probably, about 6 weeks. How long has it been going on? But it fits perfectly into the deglobalization narrative. So let's see what we have up this week. So while the Red Sea chaos continues, it does not seem, I should have said, to be affecting the price of oil so far. The fallout of much of the last few weeks will be felt first in Europe and Asia pretty soon. So far, tens of ships have been targeted. I'm not sure how many. I think I saw a number of like 42 or something. But it could be getting close to 100 now. I don't know. Most with no affiliation to Israel. Even a Hong Kong flagship ship was attacked. The U.S. Navy has been able to protect most of the shipping. God, there's lots of errors here. With French and even Iranian naval vessels now coming to assist. I think it's interesting, this Iranian vessel. I don't know exactly what's going to come of that, but someone pointed out that, not a lot of the Muslim world is coming to the aid of the Palestinians, so or of Hamas specifically. I still don't think this is going to escalate. Despite that escalation, I still think that this will not spill over. Jesus. I still don't think, there we go, that this will spill over into a World War III scenario because everyone has a significant amount to lose. Iran has a ton to lose. Saudi has a ton to lose. India, China, everybody has a ton to lose if this escalates. Nobody is has a better starting point than anybody else. Everybody is going to lose if this happens. Actually, the one that has the best starting point is the United States because we're not in that area and we don't really rely on Red Sea shipping. Maybe you could say like 0.1% of our economy is dependent on this shipping lane. But it's not very much. Where if you look at Europe, it might be 5%. So it's very important for them. It's very important for Asia that this does not escalate. The main takeaway from these events is the ease at which international trade can and will be disrupted in the new era of deglobalization. The cost to protect the sea lanes will be distributed and borne by countries less able to do so, both militarily and budget-wise. One thing that is completely lost on most anti-U.S. criticism is, I should have said, people that criticize, the U.S., is that the U.S. doesn't need this costly burden. Other countries need it for their economy to function. In other words, a breakdown in trade is an asymmetric win for the U.S. And a lot of people will say, oh, no, look at China's coming up. The U.S. hegemony is falling. But if the U.S. hegemony falls, that's relatively better for the United States than anybody else. Okay, let's go on to the next one. China's property sector continues to decline. So I've been writing about this for a long time because it has been a slow motion train wreck, and not many more big revelations have come in the last few weeks. The communists are trying to figure out how to shift money to households with two other things. So they want to shift money to households plus these two things. Not give households more freedom, where to use that money. So they want to give more money to households, more GDP come from the households. But they don't want the households to have more freedom. Because what happens if they give them more freedom? Capital flight. $1 trillion will fly out of China in the first year if they give people more freedom. So they can't do that. And so what do? How do you, now they're facing with how do you get households to not just simply save it? So if you're transferring more GDP, more investment to households, right now they're just stuffing into savings. They're not becoming consumers. They're not lifting the economy. It's not stimulus for the economy. It's going straight into savings. And so that's the dilemma that they're facing. This was made by Michael Pettis and others. It is the middle income trap. You have to find a way to give more GDP or investment to households and have them become consumers. The only way the communists get out of this downward spiral that will eventually end in the end of their economic system is to open up again, like under Deng Xiaoping. So, they famously opened up and became more quote unquote capitalist or capitalist with Chinese characteristics. That's what they have to do. They have to go back towards an era of liberalization instead of crackdowns. They've been cracking down. They've been going through a second communist revolution under Xi Jinping. So I don't think that's going to happen. They're going the other way of the way they should. So, and that is also on top of horrible demographics. Of course, I talk a lot about the demographic issues, but let's take a look at this chart. You can see China home sales extend slide in December, continues to fall, accelerating here. So it looked like it might start getting better September, October, and then November and December it fell off again. So their home sales are continuing to decline. They haven't been positive since the beginning of the year. And then look at this, 2022, they were very negative. I mean, this is month-on-month declines in sales. This isn't just like, oh, really bad sales. No, it's getting worse every month. It's a slow motion train wreck. Okay, so that is what's going on in macro. Of course, the end of the year, there wasn't a ton that I had been following. Okay, let's go on to price analysis. This was a great chart by Charts BTC. He's a longtime friend of the show. I've used this charts quite a bit in the past, and I can't open it up for some reason. So let me zoom in. And we got every year for the last 10 years, you see 2023 was the third highest. The only years that beat it out in the last 10 years was 2017 and 2020, which were, the big years for Bitcoin in the last two cycles. So the last two cycles are the only years that beat out Bitcoin in 2023, and we haven't even hit the cycle yet. So pretty crazy. Means that there could be a lot coming here for the price. What did I say here? Great chart. Yeah, that's just what I said. Last issue, I was still talking about the mid-month weakness. So remember, I skipped Monday for Christmas. So a week before Christmas was my last issue. I think it was what would that be? The 17th or 18th? And I was talking about the mid-month weakness that I had been talking about for 2 or 3 weeks prior, but it extended all the way out to the end of the year in more of a sideways pattern. It has held up extremely well with many layers of support below the price. I don't think it breaks the 37,877 support unless we have a massive flush like an ETF denial. And I say, from last week, be prepared to buy any dips down to 37,000 support with stop losses below. And don't be surprised with a big candle to open the year. So that's what we're waiting for. Today is the first. We'll take a look at a live chart here in a second. I say this is still good advice. My triangle didn't hold the price, but we have been watching the higher lows form. So it's still kind of in a triangle. It's just not really fitting this triangle that I had drawn from, I think, when did I draw this? Back in, maybe it was around the 15th of December. I drew this triangle and it just fell out for a couple days, but it's still a higher low. So it's kind of in a triangle pattern. And let's just jump to the live chart here. So we got this live chart and Bitcoin went up. It's now sitting at 43,549, back inside the triangle, which is a beautiful thing. Let's go down to the 4-hour. Take a look. Broke through the 50-period moving average on the 4-hour, spiked back up. I'm still thinking that this level at 44,193 is an important level, so I'm going to be watching that. The D-Day time for the ETFs is here. We might get an approval before that. We have the 50-day moving average here in blue coming up, passing 40,000 right now. We have this 37,877, which was resistance back here, which will act as support. So this is just a lot of good things going on the price chart right now. Everything is pointing to ETF approvals very, very soon. If they are denied, I think there could be a correction. But probably less significant than most think. So a lot of people are thinking the ETF is priced in. If it's denied, it would actually crash. But I don't think there's much of a price in effect here. I think people have priced in a 90% possibility of approval, but there's so many unknowns that can't be priced in. And so the ETF is not fully priced in. I would say it's only about maybe maximum 25% priced in. And so if it gets denied, there will be a significantly less of a correction than most people will imagine. While a denial is unlikely, I can almost guarantee the entire market is feeling the stress. And that's what I talked about earlier. The 10% chance of denial feels like a 50% chance right now because people are getting a little spooked. At least I am, because it's coming up. We're here. The excitement, the anxiety is flowing right now. The adrenaline is starting to kick up. And I think there is a possibility that only 50%, not 90% chance has been priced in. Very uncertain environment. When approval does come, there should be a brief relief spike. So when uncertainty gets relieved in the market, price should go higher. So the initial approval, there should be this release in the market, and the price should spike. Now, how big that initial spike is, it's anybody's guess, but I think there will be an initial spike followed by a cool-off period of a couple days because there won't be any actual trading. It hadn't been launched yet. It just been approved. But then if it does launch on January 10th, I would expect the price to start ticking up before then and not waiting for January 10th. You're going to front run the price here a little bit, front run the $1 billion that might come in on the first day, So the Bitcoin weekly chart is interesting because as the first ever golden cross for Bitcoin on a weekly chart happening right at 30,000. So you can see this cross is happening right at the 30,000 mark. And I think that pretty much locks in. Price will never go below 30,000. I am tempted to say price will never go below 40,000, but there's a slight chance that it does. So we'll have to wait for that declaration of the 40,000 being a floor. But 30,000 is definitely locked in. That price is not going to go below 30,000 ever again. It also corresponds to the Kijun on the weekly cloud right there at 30,000. More than a month ago, I said price would never go below 30,000, and it looks very, very likely that is the case. I'm getting closer to saying 40,000, but once we pass 50K, then I'll probably go ahead and say 40,000 will never be passed again. All right, that's all for price analysis on this one, but of course, I do a much more detailed price analysis on my Bitcoin protons. You can get those on the professional tier on the website. So, all right, let's move on to Bitcoin mining, and I'm going to check the comments here. Dex Invictus says, I don't expect ETF approval this time. I mean, yeah, you're not the only one. I know Tone Vase does not expect it to get approved this time. There are others, but I think a 90% possibility of approval is pretty legit. It just, I mean, you're paying attention. It feels like every day, look at all the stuff that happened going into the 29th on last Friday. The SEC is talking very positively. They got compliance with everybody to doing the cash creates. It's people like BlackRock and Fidelity and Templeton and these big names. Vanguard is the only like big name that's not on the list. So it just seems like there's so much momentum towards that direction. So I think 90% is the proper handicap for that. Let's see, Victoria. Okay. Dex says, I'm not just too bullish on Gensler. Yeah, man. I get that too. He kind of looks like the guy that runs the power plant on The Simpsons, And I get it. He's a bureaucrat and works for the state, and it's hard to like him and all that. But I do think that he understands Bitcoin. I think he has a little tiny thread of cypherpunk in him, and I don't think he's as bad. I don't think he's great, but I think he's the best SEC chairman we could have hoped for. I mean, look at who we had before this. Jay Clayton. He was the most anti-Bitcoin person you could have there. So Gensler is a step up from previous commissioners. I mean, you could have, say, what is her name? Hester Pierce. But she would just approve everything. She would let any scam go. She would approve a ETF for Dogecoin. I mean, so it could be a lot worse. Hester Pierce would be on the other side. She'd be too lax. Jay Clayton would be too strict. So Gensler is kind of right in the middle, but I get your concern there. Okay, I'm going to check Telegram. No new comments. All right. So let's go on to Bitcoin mining. So I do headlines, and then we go into some of the stats. Celsius, they win their court approval to shift to Bitcoin mining. Celsius has a mixed past. Remember, they went bankrupt back in 2022, right? Or was it 2021? I think it was 2022. They were leveraging and got caught up in the big unwind. They're bad actors, probably. So they do have a mixed past. I'm not a fan of the company, but this is a notable development. So here's quoting from this article I link in the bullet point. A U.S. bankruptcy judge has approved cryptocurrency lender Celsius Networks' pivot to Bitcoin mining, ruling that the company could deviate from a previously approved bankruptcy plan because creditors and customers were no worse off under the new restructuring. Celsius filed Chapter 11 protection in July of 2022. There we go. One of the several crypto lenders to go bankrupt following the rapid growth in the industry during the COVID-19 pandemic. And it would be, industry where they're talking about the leverage industry, crypto lenders. They had rapid growth. Yeah. Because of all the scams and the DeFi and all that. And of course, all the altcoiners that claim to be acting in good faith, pumping it up, rehypothecating stuff, sharing customer funds, trading customer funds, lending out customer funds. So yeah, there was rapid growth, but it was all rapid growth based on corruption and insolvency. So that's Celsius's past, and they had to file bankruptcy. So U.S. Bitcoin Corp, founded by Hut 8's Asher Ganoot, Ganoot, was originally going to manage Celsius alongside other companies in a consortium of bidders, which included Arlington Capital and was collectively called Fahrenheit. And I guess that's no longer going to be the case, but they are still working with Hut 8 for their mining stuff. So there is I reported on that on the last issue. So Hut 8 is still working with Celsius, just not in this consortium fashion here. Celsius expects to emerge from bankruptcy in early 2024. All right, so that's the update there. What we got here? Bitcoin miner ETF was up 385% until the last trading day of the year, ending the year up 290%. So they lost almost 100% in this last day. Let's open this up. You can see it crashed from about 22 down to 18, and it started the year back here at around $4, $4.50. So it lost almost 100% in that last day, which is pretty incredible. Miners had a big run. You can see I highlight the RSI here was extremely elevated over 80, has crashed now down into mid bullish territory at 60, but I don't think it's going to turn around right away. It might. We'll have to watch this as we start trading in the new year, because if Bitcoin does continue to go higher in price, that should at least place a bid under the miners, not allowing them to fall nearly as much. So we'll have to be watching this. All right, let's get on to difficulty. So it rocketed higher back on December 23rd by 6.9%. And it's on track to rise in 4 days less than 1%. And we can see this big step higher on the last adjustment. Mining is very healthy, driven by a lot by the fees right now. I was doing some studying for the Bitcoin Magazine Pro and the mining dashboard, saying that half of the rise in revenue recently for miners, half of the rising revenue comes from fees, directly from fees. And so, like, for instance, we track a 30-day window, and the 30-day window would go up, say, $100 million. Out of that $100 million, you could say 50 million came directly from fees, and the other 50 million came from price appreciation, but also faster block time. So if you have, 150 blocks a day instead of 144, there's going to be that slight amount of increase in production, right, in the value of their production. So, but 50% coming from fees is pretty big deal. Hash rate. Bitcoin hash rate reached an all-time high. You can see this back last week, but it is now down. Of course, there is this heartbeat of Bitcoin that you can see in the hash rate. This is just estimated, right? You can't measure the hash rate directly. You can only measure the hash rate by the speed of the blocks. And this is a 7-day average. But you can definitely see a heartbeat going on here in the Bitcoin hash rate, which is interesting. But it got almost up to 550 exahash per second. That's huge. All right, mempool continues to fill up. Fees are also adjusting higher, which we'll see. Remember, higher fees effectively shrink the Bitcoin supply by making some UTXOs too small to spend. Those two slashes in the mempool occurred about 3 weeks apart. We'll take a look at that. It is also possible it gets slashed again in the coming weeks. So I'm talking about these big cliffs here. This was like the last week of November, middle of December. And so we could be getting another cliff coming soon to the mempool. We will see how that works. But man, just look at that. Really, it looks very expensive. But like I said, issue to issue, when I checked the fees, it was actually down $2 for an average transaction, which is very, very interesting. I did also update the inscriptions since they are very popular right now. The number of inscriptions has been in a downward trend going into the end of the year. This could create a situation where, as the network works through the existing mempool, the amount of inscriptions could slow again like September and October. So can I pull this up? There we go. Talked about this decrease here in inscriptions in December. And then right at the end of the year, we had a big fall off for about 3 days, a little return spike yesterday. So that would be the 31st. And again, we were down here with about half the day to go. It was still down under 100,000 inscriptions. So yeah, it definitely towards the end of the year, it fell off. And if that continues, that's going to give the mempool a chance to adjust and recover. Now, the amount of fees spent on Bitcoin, you can see it was very, very high back here 2 weeks ago. I believe that was up at $50 million spent in the week. Or no, this says 30. So it was like 32 million spent in that week. Last week was about 16 million, and we will see where it ends up this week. Oh man, I was on the wrong tab, guys. Jesus Christ. Let's go back here. I need someone to be watching me. So I think we were talking about this. Went through that weekly chart. Man, how much did I miss? All the price and all the headlines. Let's take a look at the miners here. Bitcoin miner ETF was up 385% before the last trading day of the year, and it went back down almost 100% in the last day, down to 290%. You heard me say all that. Here's the difficulty, big step higher, and we will be going higher most likely on the next adjustment in a few days. Hash rate hit an all-time high. It's coming back. You see this heartbeat of Bitcoin. Man, guys, damn, I'm sorry I didn't double check that I was sharing the right image. Man. Okay. So yeah, it's coming down in the heartbeat of Bitcoin. Again, like this is a 7-day moving average, so it's not measuring directly. It's extrapolating from the block times for the hash rates. Okay, moving on. Mempool. Up high, you can see these slashes here. This is what I was talking about. Mid-November, mid-December. Maybe we'll get one here in January coming up, pulling that mempool down. Inscriptions coming down through December, drop down. We had 3 days lower in the last couple days of the year. The 31st was higher, but now we are down under 100,000 inscriptions at the time that I pulled this chart, which was about halfway through the day. All right, let's go to this one. This is the amount spent on fees for inscriptions. 2 weeks ago, it was up here at 32 million. Last week, down to, I believe it was 16 million. And you can see this week, it's very low. This is just the first day. I think they start on Mondays for this particular metric here. So somebody has to pay for these inscriptions, you know. There could be a money laundering or some sort of scam industry that is being formed around these types of things, but high fees on Bitcoin are going to limit that by a lot compared to lower fees on other networks, right? When you had NFTs on different altcoins and you had DeFi on different altcoins with lower fees, they could perpetuate this scam a lot longer because you didn't have the fixed cost of these fees. But here with Bitcoin, the more scamming you do, the more expensive it gets. So it's going to naturally limit the amount of this type of scam behavior on Bitcoin. I say that's all scam because I think that it's what makes something a scam is not necessarily your intention, which sounds funny, but it's not necessarily your intention that makes something a scam. It's if it's legitimate, despite your belief in it. So you could really, really believe in your altcoin. You're launching Dusty Coin, and you really, really believe in it, and you have no ill intent, but you're still going to end up scamming people. It's still going to end up, you're going to have to make all these extraordinary claims that you're never going to be able to follow through on. It's never going to be decentralized. It's all, lie upon lie, the tangled web we weave. So even though you have the best intentions and you really aren't trying to scam people, it is a scam because it's not going to work. It's the same with these things. Even though people that are doing these NFTs and doing ordinals and doing inscriptions, they might have good intentions, but they are still going to end in tears. It is still a scam because a scam does not depend on your intentions. That is my opinion. All right. So, and that's it. So, sorry, guys, that I was off on the screen there for a little while, but this was Bitcoin and Markets Bitcoin Fundamentals Report number 271. Thank you for joining me. I'm going to check the comments section here again. Nothing new there. Let me check the comments here. Oh, there, another thinker. Yeah, thanks for letting me know, man. I tried to get to it. I got there late. Okay. All right, guys. Well, I appreciate you guys hanging out. If you're not subscribed over on bitcoinandmarkets.com, please do so. Hit like and make a comment down below on YouTube and Rumble. Let me do one more thing here. I'm going to go back to this January price forecast competition. So if you are a paid member, you get to enter this competition every month. At the beginning of the month, you can put in a forecast for what the price is going to be at the end of the month, at the close of that monthly calendar. This month, we had our winner, Dan, Trust Your Assets, and he is a fit 5-time winner. So he's been doing great. I think he's been doing it back since it started back in 2019, but he has had awesome predictions, and the form is right there for you guys to enter, but this is open just to paid members. Let's take a look at our Hall of Fame to have some fun here. Make this smaller. So these are all our profits. I don't know, we called it that. We have a few people here. Let's see. So Dan is a 5-time winner. We have another, Rody was a 4-time winner. DT is a 4-time winner. And No Less is a 6-time winner. I think he won it like 4 times in a row. Let's see. I have everyone listed out here. No Less. So he won it back in 2020, February and March during COVID. He won it 2 times back to back, then June, and then September. So, man, he had a great year in 2020. I don't think he's been making predictions lately, though. But yeah, I appreciate everyone that enters this, and you will get your name up on the Hall of Fame if you're a winner. Plus, you get $20 in sats. So it's a pretty cool little competition there. And that's it, guys. Thanks for joining me. I'll see you on the next one. Bye.